And today I'm going to show you how to backtest and create a trading strategy. The first thing you're going to need in order to do this is some kind of charting package. For today's example, we're going to be using tradingview.com. The second thing you'll need is a spreadsheet of some kind. I downloaded LibreOffice for this. LibreOffice is an absolutely free application you can use, and it works very similar to Excel. The next step is going to be to figure out what kind of trading strategy we're going to use. For today, I'm just going to use a very simple double top, double bottom trading strategy. So now that we know what kind of strategy we're going to be testing, I'm going to go over into our spreadsheet and go ahead and type in a title for this specific strategy. This is going to be our double top, double bottom strategy. And I always bold my spreadsheet titles. The next bit of information we may like to know while testing this is going to be what pair we're trading it on. We definitely want to know the date of the trade that we take. We may want to know the time. We probably want to know the stop loss, the profit target, and the amount of pips that we made or lost on the trade. Now, if you're using stocks, where the pair is would just be the ticker symbol, and where pips is would just be the cash amount that you won or lost on the trade. Now that we have this set up, our next step is to create some rules for our strategy. And this is a very important part. You want to make sure that you have very specific rules for your strategy, so you know exactly when to take the trade every single time you see it on a chart. That's the only way you're going to be consistent in what you trade. Because if you don't have rules for, say, a double top, then is this a double top? And if it is, then is this? Or is this? They all look very similar. They all look like double tops. But unless you have a specific set of rules, you may take this one time, this one time, and then skip this one because you lost these two. You may take this one and skip this one because you lost these two. You may win these two and then take this one, even though it doesn't look quite as good, because you've won the last two, and lose this one. So it's very important to have a specific set of rules that you can follow every single time you trade your double top or double bottom, or that applies for any type of trading strategy you create, whether it be Fibonacci based, pattern based, simple price action patterns, anything, structure based patterns. Whatever you choose to create, you need specific rules. Now, for your convenience and to save everybody a little bit of time, I've already written out rules for the double top and double bottom strategy we're going to test today. And they go as follows. Rule number 1 for my double tops is on the retest. This would be the retest, the second move of the double top. Let me zoom in here so you can see a little better. On the retest, second move, the wick must touch the top of the previous body of the previous candle. So this would be the top of the body. Move the wick out of the way. The top of the body is right here. So this wick must at least touch the top of this body. Just to give you an example of what that might look like. There's the wick coming in, and it definitely gets above the top of the body of the candle. Now, if we had a close like this, with my rules, this would not be, and we could even bring this wick back, this would not be a double top, because the wick of this candle did not touch the body of this candle. Nothing did. So at least the wick or the body has to pass the top of the body of the most previous candle. Now, our second rule for the double top is the body of the retest, the body of this candle, the top of the body, cannot go above the wick of the previous structure. Here's the wick of the previous structure. An example of this would be if the candle came up and closed up here above the wick of the previous structure. This is not a double top, considering my rules. This, to me, means trend continuation, which would tell me that the market intends to go higher, which gives me absolutely no reason to want to sell this market. So I hope those rules make sense. They are the same for a double bottom. I went ahead and drawn one out, just the opposite. Instead of the highest high of the body, now you're looking at the wick has to touch the lowest low of the body. The lowest body of the candle, this wick must touch. And the body of the retest here cannot close below the wick of the initial test. So this would be an example of that. That is not a double bottom in consideration of my rules. So now I have a specific set of rules that I can follow that will tell me when a double bottom and when a double top exists based on the rules I've created. This gives me something I can test. The next step is to figure out how we're going to enter the market if these specific rules are met. So all of our rules have been met here. Now we have to figure out how are we going to enter this market. Are we going to enter on the close of this candle? Are we going to wait for a small retracement? Or are we going to do the most common thing and wait for a break of this neckline? Wait for a break of the neckline and a retest. That's completely up to you, but for today's example, what we're going to do is wait for a break of the neckline because that seems to be the most common way to trade double tops and double bottoms. So we'll wait for a break of this neckline, and what we're really expecting is a breakout to the downside after a break below this structure level right here. So if we're expecting a breakout to the downside, what I want to do is put my orders about 3 pips below the neckline. So we're on 1140. Let's go down to 1137. And that's where we want our orders to be resting. So that when the market comes down and breaks through this neckline, we get sold into the market. And the way you would place this kind of order, to keep from going into huge details about what a sell stop order is a sell stop order, not a sell limit order. The sell stop order would sell you into the market during a breakout. And since that's what we're expecting, that's where we would want our orders to rest. Now, after creating an entry technique, we need stops and targets. Today we're going to do something very simple and just do a 10 pip stop loss above the highest high of the double top. So what that would look like would be, here's our entry, and our highest high is 2024s. So what we're going to look for is 2012s. That's our 10 pips. And that's our stop loss. On these kind of structure-based strategies, I always like to make sure I have at least a 1-to-1 risk-reward. And the easiest way to do that is just take and copy your risk, color it green. And so now we have targets and a stop. We have a 1-to-1 risk-reward. We have rules and an entry technique. We know exactly how we're going to trade this every single time it happens in the market. This is all we need to start back testing this specific strategy. So without further ado, we will go down to the charts and actually test this specific strategy. Oh, and one more thing about stops and targets. You can take stops higher. You can do a 20 pip above the highest high of the double top, or you can do an ATR based stop. I have an ATR down here. ATR would be 22 above the highest high. You could do a Fibonacci extension or inversion for stop losses, just to give you a few ideas of how you could do this. For targets, you could take targets at Fibonacci retracement of 786 or previous structure right here, and that doesn't give you a really good risk to reward, but I'm just giving you more examples of how you could possibly trade this when it comes to stops and targets. Alright, now down to the charts to find some of these examples. Okay, right here I already see something that meets our rules for a double top. We've got a test, a retracement, a retest, and the body of these candles does not close above the wick of these previous candles. So that tells me this is a valid double top and a valid trading opportunity considering the rules we created for this strategy. 3 pips below the neckline is where we want our orders. 703s, we're going to go 700. There's our order. Our stops are going to be 10 pips above the highest high of the double top. 7/8s, we're going 8/8s. Copy and paste this. And as you can see, we were stopped out of this trade. This was not a winner, but that's okay. We're recording information. Take our ruler, measure it out. Looks like we lost 87 pips on this specific trade. The trade took place on 11/11/2015. So the pair is going to be the euro dollar. The date is 11/11/15. The time. The stop loss was, we have a 1-to-1, so we know the stop loss was going to be 87. Well, minus 87. We know our profit target was 87. We know we lost 87 pips on the trade. So now we've got our first trade recorded. And pretty much, guys, you just go through and do this over and over. I'll give you an example of a few more trades, and then at the end I may give you a couple of other examples of trading strategies you could start to test and try out. Right here we have another situation that meets our rules. Test, retest, break of the neckline. 3 pips under is where our entry is sitting. 2 4s, 2 1s. Stops and targets. Stops 10 pips above the highest high right here. 10 pips above 8 9s would be 9 9s. And as you can see, again, we were stopped out of this trade. That's okay. We almost made it this time. About halfway to targets. Looks like about 60 or 70 pip. Yep, 77 pips on the loss. This trade was on 11/09. So we come in 11/9. Loss of 77. 77 was our target, and we actually lost 77 pips. The time on this trade was 5 o'clock. And I'll just do a couple more so that you can get a better understanding of exactly how to go through the charts and do this. Another example right here that meets our rules. Test, retracement, retest. The retest meets all of our rules. So we will put a entry 3 pips below the neckline. Place our stops above here. 10 pips. Targets. And use our ruler tool, excuse me. This trade was a win of 58 pips. Back over to our spreadsheet. Stop loss we know was minus 58. Target we know was 58 pips, and we know we made 58 pips. Date and time. Date was 11:05 at 6 o'clock. 11:05, 6 o'clock. And I'll say just one more trade. Let's see if we can find one more place that meets our rules here. Here's a big one, okay. So we have a starting point, initial high, retracement, retest, and let's see if this retest meets our rules. the retest highest high did make it to the top of the bodies of the previous closes. If I zoom in a little bit, you can really tell that this wick did make it to the top of these bodies, so that counts. That is meeting our rules. So now we come below the neckline 3 pips, 8.6 down to 8.3, and place stops and targets. Stops 10 pips above the highest high right here. 3 sevens, 4. Let's go a 1-to-1, and we have a big winner. Ruler right at 100 pips on 11.2 at 1400. 11.2, 1400. It was minus 100 on our stop loss, 100 pips on our profit target, and we made 100 pips. So as you can see, 4 trades in, and we're about 50-50 and nearly break even on this strategy. Now guys, this is not a trading strategy that I suggest you use. This is all for educational purposes. I'm just trying to show you how you would test a specific set of rules in a strategy and put them into a spreadsheet. And for now, this stop loss and profit target area does not seem to make a lot of sense considering we're doing a 1-to-1 risk reward. But for other strategies, when your risk reward is not 1-to-1 and you have a different set of profit targets and a different set of stop losses, these will really help out. These little sections here will help you. It's information that you'll want to know. Just an example of another testable trading strategy would be something like this. As we can see, the market's breaking into lower lows. We can see that it broke this previous structure level here. And what we could do here is create some kind of trend following strategy. So we broke below, closed below this previous swing low right here. And since we did that, we can say, alright, I'll take a Fibonacci retracement from swing high to swing low, and I will sell the 618 retracement every time the market breaks below structure and retraces up to the 618. I sell with stops just above previous structure and targets as before at about a 1-to-1. And this would be a testable strategy you could go through the markets and try out and test it with 100 trades and see what happens. And you could also test different ways to take these profits. Instead of having to take it at 1-to-1, you could take it down here at a previous structure level. And for the entry, you could be a little more aggressive with it and say the market doesn't always come up to 618, so maybe I want to sell at the 50% retracement. Or you can be a little more conservative and say, well, I get a way better risk reward if I sell at the 786 right here. So there's unlimited ways to take profits, to set stop losses, and to build a trading strategy that could be profitable. That's going to be it for today, guys. If you'd like to see more educational content like this, if you enjoyed the video, then please like and subscribe to this channel. I'll be doing a video on more advanced stop placement and more advanced targets pretty soon. I'll also be doing some videos on advanced patterns, the butterfly, the bat, the Gartley, and the cipher pattern. So that's all for today. Good luck in the markets.